Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we are looking at Blue Line Protection Group, and let me tell you, their financial report is a wild ride. It's like watching a heist movie, but instead of gold, it's, well, you will see. This small company offers arm protection and transportation, banking compliance, and training to the legal cannabis industry. Basically, they are the bodyguards and accountants of weed. Are they making a killing, or are they just getting smugged by the competition? Let's find out. And hey, if you're into getting the real story behind these corporate filings, make sure you hit that subscribe button. We also have a Discord community linked in the description if you want to chat with other finance fanatics. This is their quarterly report, also known as a 10Q. It is basically the company showing their homework of how they did in the first 3 months of 2025. The most recent one, so it should be pretty up to date. This report is all about Blue Line Protection Group, a Nevada company with their main office in Denver. So who are these guys? They formed in 2006, but really got into the cannabis protection game around 2014. As of May of 2025, they had around 8.2 million shares of common stock floating around. Shares outstanding basically means how many shares that can be actively traded publicly. As always, a word of caution, like every company, Blue Line peppers its report with what are called forward-looking statements. This is basically the company trying to predict the future, but keep in mind, nobody has a crystal ball, so take these with a grain of salt. Let's get into the numbers. I know that is why most of you came here for. If you look at their balance sheets as of March of 2025, they had about $407,000 in cash receivable, which is money owed to them. But on the other side, they owe over $251,000 in payables, and that means money they still need to pay. They also have property and equipment worth about $164,000 net of depreciation. That means taking into account how much their stuff has worn down. Diving deeper, their total liabilities were roughly $1.9 million, which is not great, and they had a stockholders deficit of over $606,000. It basically means that if they sold all their assets, they still could not cover their debt. Looking at their income statement for the 3 months ended in March, they raked in about $1 million in revenue. That's the top line, people, the big number that everyone looks at. But hold on, it costs money to make money. Their cost of revenue gobbled up about $388,000, leaving them with a gross profit of $8,000 to make that million. Then comes the operating expenses, those pesky costs of running the show. They spent around $12,000 on general and administrative stuff. So at the end of the day, that operating income was only around $38,000 for the quarter. Unfortunately, it does not end there for Blue Line. Like many small companies, they have to pay interest. After paying interest and some other expenses, they ended up with a net income of only $3,082. That shakes out to practically zero earnings per share. They had roughly 8.2 million shares outstanding. To compare, in the first 3 months of the previous year, they made about $157,000. That translates to 2 cents per share. What changed? A lot of stuff. When it comes to cash flow, they made over $127,000 from operations, spent over $2,500, paid down about $67,000 debt. At the end of the day, their cash increased by just over $57,000 in debt. At the end of the day, their cash increased by just over $57,000. Speaking of shares, at the end of March of 2024, their deficit as it relates to common stock was over $1.1 million, and a year later it went down slightly to just above $606,000. So what else is interesting in this report? The company goes into their history and what they offer. It looks like they are doing a lot of providing the necessities to operate a cannabis business, such as transportation and cash management. They then go into the technical accounting mumbo jumbo that not even accountants fully understand. Here's the kicker. The company itself admits that there is substantial doubt about its ability to continue as a going concern. That means there's a real risk they might not be able to stay in business if they can't get more cash. Alright, it is time for a bit of corporate drama. It looks like that they were in a legal dispute with Daniel Sullivan, but it was determined Blue Line has no legal obligations towards him. They are locked into some leases. They have almost $500,000 in finance lease liabilities. Hopefully that vehicle is worth it. It looks like Blue Line also has some risky financial instruments that the government requires it to disclose. These are derivatives, and they are worth over $435,000. They say that one major customer makes up almost 9% of the revenue, and that 2 customers make up over 30% of receivables. Seems like Blue Line needs to diversify their customer base a bit. They have a ton of related party transactions where they take loans from executives. This isn't the best look since it's always a question if these payments are fair market value or if there might be some shenanigans. A lot of the loans are at 5%, but they pay more at default with 12%. They are authorized to issue 14 million shares of common stock. As we said earlier, they only have 8 million outstanding, so there is still a lot of potentially dilutive shares that can go around. They talk about issuing a ton of stock options to executives, and those shares will be dilutive when they are exercised. These executives are also going to make a killing whenever those options go in the money. I see that they cancelled 30,000 options. It seems insignificant, but it's worth reporting. A lot of the sections are boilerplate legal jargon that isn't too helpful. App 2, so what's the takeaway here? Blue Line Protection Group is in a tough spot. While they are still making money, they have a lot of liabilities, a limited customer base, and their own auditors think they might not be a going concern. That is a major red flag. But they are dependent on the cannabis industry, which itself has many regulatory challenges. What are the notable risks and opportunities? Well, if marijuana gets legalized on the federal level, that could be a big boost, but increased competition could also hurt their margins, and of course there is always the risk that some of these lawsuits or debts come back to bite them. Overall, Blue Line Protection Group seems to be in a risky business. The numbers tell a story of a struggling company in a growing but uncertain market. Investors should tread carefully and weigh the potential rewards against the very real risks. Alright, that's our breakdown of Blue Line Protection Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.